What's up, everyone? Welcome back. We're gonna go ahead and get into some quick back testing on GBP USD. I've been streaming a little bit overnight, but not many people are up during those hours, so I'm gonna go ahead and get some trading going in right now. Not live trading. We're just gonna do some back testing. So hopefully some people can catch this live. And if you are new to the channel, go ahead, drop a like, maybe subscribe if you like what you see, and we can talk about how I trade a little bit more in depth if you guys want to know all that. So, all right, let's go ahead and get to the charts. All right. Cool. All right, so usually when I'm back testing, I usually find some good music to listen to. And for those of you that don't know, I back test on TradingView. You have to pay for like their pro version. I think it's like $10 a month, so you can use the bar replay, which is basically what people use for back testing. And main things I use, things that help me with back testing. Let me turn this down a little bit. I turn it down in my headset. Duh. All right. So what I was saying was, so some useful tools that I use when back testing, it would be my sessions indicator and also the day of the week indicator. So basically, each little highlighted day or highlighted color is a day. So this little skinny one is Sunday. So that's when the market opens up. So you have Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, and then of course nothing on Saturday, and then it repeats for Sunday. So that way I know what day of the week I'm trading on, instead of having to look at the date and then go back to my calendar and check that. So let's go get this full screen too. So day of week, and I basically have an indicator that's called sessions. It does the same thing basically. It just shows you when I'm in the New York session and the London session. So yeah. So let's go ahead and get into it. And other indicators I have up is RSI. I rarely look at this thing. It's just something to look at. But I do use the 50 EMA. So that's the only like real life indicator that I use. That might give me a potential idea where price is going. All right. So I don't want to go back as far as May. I think I've back tested June and July recently, but I haven't done August. So here, I'll just do it randomly. So try to see what it takes. There we go. All right, let's get into it. So I do a top-down analysis. I look at my higher time frames, looking to see what we have and seeing where price is going. I trade smart money concepts. I use like order blocks, or some people call them supply demand zones or whatever. I just call them order blocks because that's how I learned about them through YouTube. All right, so let's see. So I usually draw my order blocks on the daily and the 4 hour. In all honesty, I'm not seeing any crazy clean ones right now. Might be able to say there's one there. Let's go to the 4 hours, see if we find something a bit cleaner. So I like this whole area right here. Like these type of things, I'll highlight the whole thing. That whole push up. And that might look like something on the like 16-hour time frame or something like that, but that's a clean push up, breaking structure right there a little bit. Then we came back down, left a huge imbalance, so the imbalance for sure has to be refilled, and I'm also looking for price to come up and mitigate some of this area. So if I did want to go to the 1 hour just to see what this looks like. Yeah, honestly, I might just leave it like that. Honestly, I just look for a rejection somewhere in this zone, It could be up here, it could be right there. So I'm just looking for any of that stuff to happen up in that area. So let's go back to the 4 hour. And usually what I like to do is, no matter where price is, I like to sandwich it with the order blocks. No clean ones down here. Maybe that. I don't know if that's been mitigated. Let me draw that up. Okay, that one's already worked out. I see these patterns so much, I feel like I see them before. This one maybe. It looks like the open of it's been mitigated, so I'm going to leave it this light blue color. That's like the color I use for my refined order blocks, usually, in other words, lower time frame ones. So when I see it, I realize it doesn't hold as much weight as something like a 4 hour order block will hold, or like a let's say like a high probability order block or something that has been mitigated or something like that. Just a mental note for me to realize that it's not going to hold as much weight as this order block. And this one is that darker blue there. And what I like to do is, if I'm trading in the week, I actually will lock these up so they can't go anywhere. All right. Let's see what we got. I mean, if you want to take price higher, that doesn't look that clean. Let's go to the 1 hour if you want to, if you did really want to get into the market now. Nothing really clean, at least as far as these pushes go. All right, so now let's look at market structure and see where price has been headed and where it could potentially go first. Okay, so I don't like trading towards these zones. So you see how we're like, price got all the way down here. I wouldn't have like my take profit all the way down here hoping to hit that order block. A lot of the times it will head directly to your order blocks, but something you have to back test. I realized I was taking a few more losses trying to trade towards these zones because price can bounce all around. They'll go break a low, break a high, it'll get pretty close, but it won't mitigate it, but then they'll come hit that one, then finally go to that zone and then give you your big push down. And you don't want to be selling in here this whole time where you could have caught some pushes up, or you could have just waited for the actual big move down. So that's when the markets are kind of choppy. Yeah. All right, let's get it. All right, I'm gonna leave. Got an imbalance in here. It's not something I really trade, just something to look at. You could see like a potential bounce here, then it go down, something like that, or it could very well go all the way up. Price does what it wants. You just got to be ready for it to do whatever it's doing. So let's see what day of the week we're on. Monday, Tuesday, Wednesday, Thursday. Okay. All right, let's see what happens. So at this point, I throw up my sessions indicator and I leave it on. Sessions indicator just basically showing me when most of the big moves happen, which is during these highlighted areas here, either the London or New York session. You see big pushes here, boom, money to be made, boom, boom, boom. Got a little push there outside of that session, but most of the big moves are happening in these zones, so that's why most people trade during the London, New York session, because there's a lot more volume in the market. And you're going to practice like you're going to actually trade. So, all right, let's see. We're pretty far from those zones. So this is when I'll start considering 1 hour order blocks. Or I'll go look at another pair and see if we're closer to these bigger zones, because those will give me the big moves I'm looking for. I honestly don't see any reason price needs to go up and fill any of like this stuff over here. Like all that stuff has been mitigated nicely. A bunch of wicks up into it after it broke away. Price came back to it. You don't have any huge imbalances like this. Usually with stuff like that, price needs to come back and refill all of that. So, and based on how price is moving right now, been bearish, let's say since it broke out of this zone around June 15th, and we're on July 22nd with the back test. So it's been pushing down for a minute, although we've been pushing up since July 21st. So like the last day or so, you've been getting a nice push up. So you want to look for a nice confirmation to catch this to the downside. I don't see any good areas to sell yet, but this could continue to push up. So let's see what happens here. In all honesty, I'm not trading this. And plus, I already missed some moves that happened during the sessions. I just marked this up because that was a 1 hour order block. I wanted to see if price did anything off of it. Alright, so we're heading bearish. I should have paused it a little sooner. Alright, go try 1 hour, see if we made any order blocks, which we did. So we're bearish on this, we're waiting for our setup to happen. Basically got this little 1 hour order block here. So now that I want to catch this to the downside, let me remove this. I'm looking for price to come mitigate this area, and then I could potentially take it lower. Maybe I usually target structure, not so much like order blocks. That's what I was talking about earlier. Don't sit here and try to hold that trade all the way past here when you might get somewhere up in here and then price will reverse a bit. It may go and break you even, or break you out, or stop you out. Sorry, stop you out, or either put you at a break even when you could have hit your take profit or been out. So don't be too greedy, especially if you could catch a very nice risk reward. So let's see what this gives me. Let's drop down to the 15 minute. And if price gets close to my zone, then I'll switch to the 5 minute. That's where I look for my entries. It could keep going down. Oh, all right, that happened fast. So pretty much started the New York session is what got us in this area. A lot of momentum. It looks like it even gapped up, like this whole area from here to here. Those should be lined up, and it's not. So the market even gapped up. Some people trade the gaps. They like these gaps eventually have to be filled as well, which they usually do. It depends on how long it takes. But I'm looking to sell this anyway, so let's see what happens. Huge imbalance. I'm holding still. All right, so let's say we get price to break this low and our 50 EMA makes its way up here. As it's breaking that low, get a lot of momentum with price pushing its way down right there. Then I'm in for the sell as soon as we break this area right there. So give or take, if it's crossing the 50 EMA already, or if it's hasn't broken structure yet. But if it's fairly close to doing one or the other, and is doing one of the other ones, like it's breaking structure pretty strongly, then that's a good enough confluence for me to get in the trade. So let's see what happens. Like something like that. We didn't break structure yet. 50 EMA is all the way up there, so let's keep watching it. All right, I like that. 50 EMA is still kind of away a bit. I'll probably go ahead and take a trade here. All right, guys, I'm sorry about that. I only have one person watching right now, so it's no big. Um, Anyways, let's go get back into it. So I was just talking about taking a trade here. So let's see what happens. So honestly, get in right there at the break of structure. And as far as risk goes, I would only risk about, let's say, I will only risk about half. I'll probably target somewhere in there. Really looking for it to break this low. It's a lot of momentum up. We are pushing up for the most part. Oh no, I'm gonna stick to what I'm saying here. Price can go either way. We're gonna try selling this down though. Yeah, let's target somewhere up in there. And I'm gonna go ahead and tell you now where I'm gonna be looking for my second entry. I take my second entry where I'm at a 1-to-1. So let's say I enter right here, second entry. Sorry, that is a long position. Stop loss is gonna be there. So the whole idea behind doing this is, so the original trade is a 1 to 3.44. So that's pretty good. So let's say I risk $250 or $500. Let's just say for the sake of this, I risk $500. So if I lose this trade, I lose $500. But if I win it, I win it at least $1,500. That's a 1 to 3. And so I'm only risking $500 to make this $1,500. But now if I'm taking the second entry, and so this one's a 1 to 2.5. So let's say 2.5 plus 3.5, it gives you excuse my math, 6. Yeah. So it's gonna be a 1 to 6 now instead of just a 1 to 3. But I'm still only risking the same amount. I'll tell you how. So let's say price is moving here. It pushes up, hits this area. Boom, second entry is triggered. So we're now moving. What happened? Oh, we're now moving this to break even now that we're into this trade. So if price now wants to go against us right there, then boom, I stopped out of this one, but my risk is the same exact risk as it was here. So now I'm still only losing that $500. So I'm now risking $500 to make was it, sorry, get my calculator. I could do math a lot faster. So now I'm risking this $500 to make, what did I say, 6? So 1 to 6. So I'm now risking it to make 6. Or to make $3,000. So 1 to 6 risk to reward ratio, because we have the 1 to 2.4, and then the 1 to 3.4, and the 1 to 2.5. So it gives you 6, and that's with the same risk. So instead of only making $1,500 on this trade, I can now make a good $3,000 on it, which is cool. And if you really want to, you can keep up the same thing, keep trailing it. I usually like to stick with like 2 entries. I don't get too greedy. You can take a third entry here. That one can be low risk if you want to, so you don't want to eat up your profits in case it doesn't go all the way to your take profit. Because when I'm starting getting this close to my take profit, I don't want to be messing with my profits too much. I want to take what I'm able to get. So it's up to you if it's worth it to make another like 1.5, which would be a little over, what is that? Like, was that $750? I don't know if my math is right, but it's not worth it to me at that point. I like it a little closer to my original entry. So I'll go ahead and honestly leave this up on the screen, and we'll see how this trade plays out. So if I lose this trade, then I only lost the 1, and I'm only in this trade once it hits here. So let's see what happens. All right, boom, second entry's triggered. Now break even on this. I'm only targeting here. I'm not trying to target this low or this high. Some people they want more profit, so they're trying not to risk too much. So they think, oh, I'll just target a further area, but it's harder to catch those bigger moves, especially when you're talking about price breaking lows and highs like that. So everyone that's selling this right now, they're targeting this high right, or this low right there, and I'm not doing that because price will easily go hit a 180 and continue on its way up. So, all right, so second entry is triggered. All right, boom. All right, so right here. So, and when this one gets to 1-to-1, that's also going to break even. So whenever I get 1-to-1 on these positions, that's when I'm break even. So let's go ahead and do that. Say I'm break even here. And if you don't believe that was 1-to-1, I'll show you. It was about, it's basically at the entry of this. I'll measure it with this. Drag this area down here. So when price broke this level here, I'm now 1-to-1 on that position. And if you're really smart, you'll be partialing your positions on the way up, because price isn't always guaranteed to go and hit your take profit. But now on this trade, let's see what I would have potentially made. So from my initial position, that's 1-to-2 right there on this position. And then with this one here, and if I saw price if I saw this consolidation and I wanted to get out, I probably could have got out with about a little over $1,000 profit, maybe almost $1,500 once it hits this area, because I have this 1-to-1 right here and this 1-to-2 over here. If you add those up, that's your original 1-to-3 that this first trade was. So that's the beauty of stacking your trade and doing it like strategically, because if you stack your trades just slapping them on there, and then you're not letting price move the way it wants to, and now you're in double the drawdown that you're initially set up to take, then that's just bad risk management, and it's going to mess with your psychology, especially when it comes to wanting to stack trades. So I don't always need my trades to get to my take profit to get my 1-to-3. I'm still only risking that 500, and I could have took that 1,500 and been cool. I have a little rule, like when I start getting over 1-to-3 in profits, I'm going to start either partialing it, or and when I hit 2%, I'm going to close out 2% of the, move my stop loss under that 2%, and then take that regardless. I'm not losing 2%, you know what I'm saying? And, but if I'm like targeting 1-to-6, then, and I need to give price a little room to breathe, then I'll do that depending on how the account's looking, or if I'll just go ahead and take that 2,000, which is cool because I'm living to my risk to reward ratio, and I'm totally fine with that. Because I risk about 500 per trade, and 1-to-3 would give me $1,500. Have you tried higher risk to reward? I didn't even see that. Oh, I'm on the wrong account. Yeah, I definitely target higher risk to reward. I usually target higher risk to reward when I'm inside of actual supply and demand, or like higher time frame supply and demand zones, or order blocks, whatever you want to call them. So like these zones I have marked up here, this is where I'm targeting that higher RR, because that's where I'm looking for that big price movement. This right here, this is just the intraday trade right here. If I could take a quick 1-to-3 for the day, I'm good with that. At least on the funded account, I am. So something like this, I'll take a trade that'll give me maybe like a 1-to-15, or I think like 1-to-14 is the best one I actually like marked up and caught. I marked up some better ones in like back testing and stuff, but realistically I haven't gotten anything higher than a 1-to-14, and that was a pretty good trade. But those are hard to catch. They're really hard. So I just go for what I can keep my win percentage high with at least a 1-to-3 risk to reward ratio, and I'm happy with those. But yeah, thanks for joining the chat though, John Doe and Lex. I appreciate you guys for joining it. Leave a like and subscribe if you haven't already. I'm going to be streaming a lot more frequently. Pretty much anytime I'm on the charts, I'm streaming. Let's see. I doubt my chat is showing up, of course. I'll fight with that another time. Yeah, it is what it is. All right, so let's see. Go ahead and look at what I got going on. So let's go ahead and see how this pans out. I'm just curious to see if it is gonna go and hit the take profit or what. Sometimes if I'm not happy with the profits I got, like 1 to 3 is a good day for me in all honesty. But if I see like a high probability trade, then I'll get in for a second one. But I don't want to chase trades if I'm already got some profit from it and it took me back to my initial entry. Let's see what happens. Yeah, I think we're gonna push it down. Ooh, that's just nasty. I don't like seeing stuff. It must be a Friday on the chart. Yeah. Okay, that's the start of the next week. Usually when you see crazy price movement like that, like that's like Friday type stuff, or like usually Sundays are pretty chill. But I figured it was like an end of the week thing. But the market opened up doing that, and I do not trade the market when it looks like that. And plus, I don't hold trades over the weekend because I'm just getting myself mentally prepared for the FTMO challenge. But so yeah, I would have been out the markets anyway. Some people don't even like trading Fridays, but as long as you manage your risk right and you're not over here chasing trades, you can trade any day of the week, honestly. Usually Sundays I don't, because I'm not looking to hop on the chart as soon as the market opens on Sunday. All right, let's go ahead and push it to the next week and see what's going on. Hopefully we can get price to move towards these bigger zones here, and we could get maybe a higher RR trade like John Doe was talking about. All right. Yeah, smart money. A lot of smart money traders, they catch crazy risk to reward trades, which is lovely. But your psychology got to be built for that. I'm not there yet. Like I can mark them up and back test it, but they're hard to catch because you have to take a few L's. Of course, your winner is gonna wipe out all your losses, but like the toll that takes on someone mentally is a lot for like a new trader at least. All right, so let's see what we got going on. Let's go to the 4 hour. Nothing really changed besides like this huge imbalance we still got there. Looking for price to go down there. Yeah, I'm thinking we'd go down there before we go up there. I didn't see this order block. This is actually a really nice one. So how I consider an order block to be a really good one is basically if that candlestick, I'm looking at this blue candle here, you see that price, there's a lot of momentum in the market, price pushed up, it broke some highs there, probably enticed a lot of buying there, and the market dropped heavily on the opposite direction, and then it leaves an imbalance too. I love it when they have imbalances with them. That's just like a higher probability order block for me. So those are ones I really like. So I don't know if my eyes are just drawn to like the imbalances, and then I look for the order block on that. I don't care if it's a doji. I love when it's like not so much a doji, like more of like an engulfing. Those are my favorites. And sometimes when the engulfing next to it will have a wick that exceeds the actual candle there, I'll actually include the wick of that as well. I like those. That doesn't have to necessarily be an engulfing. All right, so we're gonna back out a little bit. See what we're thinking my price is gonna do. So I'm still bearish on this. I'm not seeing any good buy opportunities. Some people will take a trade off of this area here, or maybe trade off of this imbalance. Price could very well retrace off of the imbalance area. But I'm looking for price to go up into these order blocks, give me a push, something like that, and then the big move down. So we can see something like that, or we can see something like price goes down here first, which is what I'm expecting to happen with all this bearish momentum. I can see us heading to this order block first, and then we might get like something like here, bounce there, and then a big move down. So overall, I'm kind of bearish on this one right now. Yeah, I'm looking for price to start breaking down, but I'm doing it carefully, managing my risk nice with it. So that's just my projection. So I'm bearish overall, looking at it with the order blocks and everything and seeing where price may potentially want to go. But either way, I'm looking to trade off of these zones. But the big moves I'm looking for are the down moves. So maybe off of this one and this one. But if I could catch this order block all the way up here, then that'd be nice as well. So let's see what happens. So we are still on Sunday. For those of you that are new to the stream, I was talking about this indicator, basically indicating each day of the week. So I use it when I'm backtesting. So the little skinny one is Sunday. So you have Monday, Tuesday, Wednesday, Thursday, Friday. So I just count off from there. So we're on Sunday. Gonna head into Monday. Let's get our sessions indicator up. And this one just indicates the start of the London session. You have your New York London overlap and the remainder of the New York session. So that's pretty much what that is there. All right, so let's see what happens. Yeah, so I will honestly just watch the market at this point. Let's put it on the 1 hour and just click through it a bit. An important thing of trading is knowing when to stay out of the market. You don't want to force trades. Of course, I could drop all the way down to like the 15-minute time frame and find some type of 30-minute order block and try to take a trade off of that. I don't like doing that because those trades don't seem to pan out too often for me. See, this could be an order block forming on a higher time frame right here. You know, I mentioned this other one up here, how you have price push up heavily and then you're going to get that big push down. That could create an order block on a higher time frame. So you got to be able to see those things on different time frames. So you might get an order block form right there in the future, but we're going to see what happens. I just know I'm not trading yet. All right, it's pushing up. So that didn't happen like I was thinking. Oh yeah. All right, so we might hit this zone first. All right, so if I really wanted to get in the market here, that's not really a great order block. You got a huge imbalance here. I'm still not in the market. All right, let's see. Yeah, I'll probably honestly wait till we get some type of play. I was looking at this as an order block on the 1 hour. I wouldn't let that hold too much weight. Still didn't mitigate it. So now since we're getting pretty close, I'm gonna drop down to the 15-minute time frame. I look for my entries on the 5-minute time frame. Let's see what happens. All right, so boom. All right, so sometimes it depends. A lot of I'm not gonna say a lot of the time, but backtesting, I've seen that price can go to the open of these order blocks. This is a bear, so this bearish order block. So this bottom part is the open. The open and the 50% hold the most weight to me. If I'm looking for like those like sniper entries off of it, if I'm just like trying to catch it just by as soon as price is there, I'm buying. Basically, I have a buy limit set in my mind. I don't really like trying doing that, but the open, I love the open. Yeah, sometimes I miss some beautiful moves off of it. So if I am being impatient and I want to get in a trade, I'll take a trade right off of the open of the order block. Stop loss somewhere in here. If you're not really sure where you want to put your order block or your stop loss, if you're trying to do your low risk trade off of the open of it. Let me see if I draw this, or that's the wrong way. Get your Fibonacci. I occasionally use the Fibonacci as like a so I put my stop loss between the 78.60 and the 61.80 just to get that some room to breathe. But the tighter your stop loss, the higher the RR. So you got to consider that. So you could kind of go in between, look for at least like a 1 to 3. You have all this imbalance there. You got like a little double bottom, so some liquidity there. So the price could very well come all the way back down here. And then for my big moves off of the order blocks, they either happen right at the open for me, or it happens with the second test of that order block. So you can see price move away from it and then it'll come back. I'll just draw it up for you guys. You can see price do something like that, come back to this area, and now you got your big move down. So that is if we are looking for the huge move down from there. So let's go ahead and see what happens. So I'm going to go ahead and mark this one up since I do occasionally take these low risk. And as soon as this is 1-to-1 on my risk to reward, I'm going to break even. See, I stopped out already. I don't know if that necessarily hit 1-to-1. Gonna measure it. probably a better way of measuring it, but this is how I do it for now. So yeah, we hit 1-to-1, so I would have been break even on this. So break even basically means I'm risking 500 for the trade, and as soon as I hit $500 in profit, I'm going to break even. So now it's a risk-free trade, and then add a second entry. But since this is already a low risk trade, I'm not going to add a second entry there, because I'm expecting price to either come bounce off that again, or or may just disrespect this order block entirely and head up to this one above. So you always want to draw these areas up. That's why I say sandwich price with your order block, so that way when price is heading towards it, then you could be ready for anything, you know. So on this, I realistically would have broke even, wouldn't have made any money. Usually when I do my break even, I actually move my stop loss a little bit more in a profit. Is that what RR can you make in a week? I mean, it's honestly dependent on the market and like how much you're able to see the charts that week, because moves happen. Although I try to trade primarily during the London, the New York session. Yeah, although I try to primarily trade during the London and the New York session, you can have some moves happen during the Asian session or something like that. So, and if you're not looking at the charts and you just happen to miss that setup, then it is what it is. You can't really be mad about it. But on a good week, I don't really count my RR for the week. I've been lately kind of calculating it off of like a percentage. So going like we're only risking 0.5% for a week, or 0.5% per trade, and low risk like 0.25%. I did like 10% in a week. So the RR is, I don't know. I might start adding up my RR. I consider doing that like when I'm back testing and stuff like that. It give me a good idea how to like translate that into potential profits on an account. But I just make sure if I can cut down on my losses, and when my winners do happen, that they're pretty nice. So far I haven't lost a trade. I don't think. Everything either has been break even or like partial profits. So yeah, let's go ahead and see what happens on this. So that would have been a break even trade there. And so now we just wait. And so a high probability trade for me would be something like a I don't know who's watching right now, but it would be something like where you have a break of structure, and then you also have a break of this 50 EMA. So that's a high probability trade for me. So let's say price decides to break this low here, and then it also breaks this 50 EMA on the way down, then I'm in that trade, and I'm looking for at least a 1 or 3 on it. I think we're about to go up on this. Wait, that might be my spring. If you're familiar with Wyckoff, or my UTAD, since they're selling. No breaker structure yet, although we did cross that 50 EMA. I'm not liking the way it's moving. Did it break structure? It didn't. I don't know yet. Yeah, see. There we go. Now that's one I'm in right there. Broke structure right here. We also shot through that 50 EMA. So you could either got in here when you broke this little high, or when you broke right there. So the reason I use that EMA is to just keep me out of the markets from like just avoiding all this consolidation and drawdown. I want to be directly in the profit. You saw this one was direct. Well, that was like right off of the 50. It went right into profit, but I don't like experiencing a lot of drawdown, at least for a long amount of time. Now, usually my best trades come off of like when I'm directly in a profit. So I try to do that every single time. So honestly, I can still see price either coming down here, bouncing up, but that's way too small of an RR. Although I see that as a potential pivot point, but I'm looking for it to go at least a bit lower. So at least target this liquidity here still. And remember, as soon as we go, I'm going to go ahead and mark up my second position. Remember, when you go when we get 1-to-1. That position is going. I'm so sorry, I have not been showing the chart. So I don't know where I pulled it or where I stopped recording at the chart or whatever. I need to set up like some type of notification for my messages because I keep doing that. I appreciate it, John. Let's see. All right, so did you have a question though on how many pairs? I only trade US30, US30 and GBP USD primarily. I'm trying to get into trading JPN 225, so that way, like you know how I showed you the sessions where this moves a lot during the London and the New York. The JPN 225 moves a lot during the Asian session. So I work a 9 to 5 on the West Coast. So me getting off of work, I'll be able to get off of work and hop right into that Asian session and catch some trades on that. So that's something I've been practicing with. I don't know if I'm gonna bust it out on the FTMO challenge, but I don't know. I'm gonna probably start back testing that a little bit more. But right now, I pretty much feel like I'm master US30 and GBP USD. Like, well, not mastered. I can see the moves that I want to catch at least. Eventually, I'm gonna start targeting those higher RR trades. But right now, like I'm pretty comfortable with GBP USD and US30. But I'll go ahead and show you all the other pairs I'd look at occasionally. So USD JPY was one of my things I like to see move during the let's say like the New York session, but it seemed like this one moved a bit more during the New York session, but it would move sometimes during the Asian sessions. But it's like I didn't like how big of a lot size you have to use. It's because it's a slow mover. Like for the day, the average daily range for that pair may not be much. GBP NZD, my strategy works perfectly with it. So can you trade London before work? I can, but I feel like most of my trades happen during the New York. So I work at 8 a.m. So I either have to go to bed early and wake up at like 4 a.m. catch the New York session, or I can stay up late trading the New York session or the London session once that starts at 12 a.m. and then I'm trading that from 12 a.m. to about. It depends on how much sleep I'm willing to sacrifice for the night, but I stay up honestly till like some days I've done like 4, and yesterday the day or night before I was up to like 5. It was bad, but yeah, it's kind of hard when you work a 9 to 5, man, or when you work any type of job full time, and like working around that schedule. But yeah. So yeah, US30, JPN 225, and GBP USD are my main ones. I do not touch GBP JPY. Euro USD is basically GBP USD to me. GBP NZD is nice. I just don't like the spread on it. I do pretty well with it, but I could catch like similar setups on GU, and I'd rather do that. Yeah, and I look at cryptos and stuff like that, but I don't actually trade those. And NASDAQ and SPX are just basically the same exact thing as US30, just not as volatile. Like SPX being the slowest mover of the three, NASDAQ right in the middle. So if you're trading a small account and you want to trade indices, start off with like SPX. And if you want something a little bit more, I guess they're all theoretically the same. When you look at market structure and how, if your strategy is based off of like using your risk based off of market structure, then you can trade any of them the same, make the same amount of profit because they move very similarly. But I just chose US30. I've always wanted to trade it. Back when I had smaller accounts, I couldn't handle it because it moved so fast. But yeah, let's go ahead and see if this trade plays out. Let's go ahead and see if we get to a 1-to-1. Selling some drawdowns. So we're 1-to-1 right here. And on this trade, I'm actually going to add a second position. So boom, stop loss here. So now that's break even. This one is risk the same amount that we are risking here, and we're targeting the same area. So now I forgot what the risk to reward was on this. I think it was like a 4. So you got the 4 plus the 3. So you're getting about 1 to 7 if this trade pans out. That's cool. And just this little movement here, like, this is beautiful. That's only 38 pips, and you could catch a 1 to 7. It's not bad at all, and that's without having a crazy tight stop loss. So this one, I actually would have lost on this position, and this one was break even, so I would have been out this trade. Oh wait, let me actually fix that. So we got our first loss. Usually if price does something like this to me, oh, we didn't even push up in here yet. So this could just be an instance where I didn't give it enough room to breathe, but if I'm being real, I would have put in the second position there. So let's go and see what happens. So this is a loss, so I put that there to remind me that it was a loss. I think we're going up now. Oh, there we go. That's the move down. So we actually had one more push up before it decided to fall. I was just in one move too early trying to catch it. I thought it was happening here. But that is a lot more momentum right there. Got your break of structure and a lot of momentum there. I honestly probably would have waited till like maybe here. Maybe even here. That's a nice push there. Could have got in there, caught that. But I was waiting to see if it was actually going to go ahead and push up towards this order block. So it basically kissed that take profit area. Yeah, it broke through it. So that would have been a decent trade. I would have targeted the same area, most likely. Let's see what happens with it. So can you trade London before work? German 30. I've heard of German 30. I haven't I looked at it a couple times. Here, let me get that up real fast. German 30. Let's see. I thought there were a lot more options for it. CFD should be the same thing. Anything I look at for the first time, I go on like the weekly or the monthly chart just to see where we're at, if we're like making all-time highs. Okay, so this is like all since 2011. Yeah, it's pretty bullish right now. I'm pretty sure this is COVID, March 2020. Yep. Those big push down like that just happened during the pandemic. Wow, this thing gapped on the weekly chart. That is crazy. I want to see that. Like, how does that even work? I go to the 4 hour. Maybe daily. That's fair. Oh my god. So what just happened in here? That is scary. That is a huge gap. But that's just during COVID. Don't worry about that. Honestly, it looks very similar to the US 30. Let me see how many pips you got for like a day range. So 235. I'm gonna compare it to like US 30. It's like a similar size candlestick. Some of those 6. So I'll say it's probably equivalent to what like NASDAQ is when it comes to how much it moves. Yeah, it's very similar to NASDAQ. And it looks like it moves the same, honestly. Let me see if I can get 2 charts up at the same time. Where did it go? Oh, there it is. All right. All my indices are orange. All right. You can change your layout here. Put 2 charts by each other. Oh wow, I haven't seen this chart in forever. That's crazy. All right, move that. Actually, I'll leave that. So JERD 30, got NASDAQ open there. And you see these movements? Very, very identical. You got this push down here, right there. We're looking at this one. Push down here, push up, break a structure. Same thing here, push down here, break a structure. Up, down, or down, up, I mean, down, up, broke structure, low, up, down, up, right here, up, down, up. Like they're moving very, very similar to one another. Yeah, both of these are the daily chart. I'll try to get them about the same size so you can see. Sorry, I used to trade with a dark screen. Now I'm trying a white screen for a while. Very similar. Okay, I thought something was weird with that. Yeah. NASDAQ looks a bit cleaner to me. Time frame, are you looking for order block? I look for the order blocks on the daily 4 hour and occasionally the 1 hour. Like let's say I have an order block drawn up here for a 4 hour. I got another one drawn up like here or something like that. And let's say this is like the weekly chart or something, for example, or let me just spread them out. And prices just like bouncing around all up in here and doing what it does. And I mean, what am I gonna do? Go weeks without trading? No, like these are just my high probability areas. So I'll drop down to like the 1 hour, and then I'll probably take a trade off of an order block up in here or something like that, looking for it to bounce up and then take me to this area or down there if it's like a bearish order block. But yeah, that's pretty much how I do my order blocks. So I sandwich price wherever price is at. I find the best order block above it and below it. Sometimes you always can't find one in both directions, but and don't force them. If it doesn't look like a clean order block, then don't draw it up, you know. But in all honesty, looking at German 30 compared to NASDAQ, I will honestly trade NASDAQ. This consolidates a lot. Like a lot of wicks, a lot of up and down. So I mean, it's a lot of breakouts on the lower time frames. So that's a lot of potential moves. So this might be something nice to trade on the lower time frames. Let me see. I have to backtest it to know like what how it really moves, you know. So let's get this area marked up here. Template, white box. That's right, I'm not on the black background anymore. And we're gonna take the replay in there. Gonna drop it down. So take the replay here. Drop it down to like the 1 hour. See what's going on up in here. Yeah, I just want to see if this like heavy consolidation is like tradable. I'm not saying that the market is only doing this, but I just consider it because this is what it's about a week. About the whole area marked up is about maybe a month worth of trading. If I go to the 4 hour chart, play it through. That's kind of bounce off of this area. I'll clean order block, at least on the 4 hour, maybe the 1 hour. I probably disrespected that. Yeah, but I probably could have sniped it on the 5 minute. And if you're targeting that high, it's usually like a good 1 to 10 restore reward. It looks alright, but I would, just looking at this month, what was that, February? Yeah, it was a little choppy, but the economies weren't too great at that time, so thanks to COVID and all that. So let's close this out. Look at price a little more. Yeah, you see a lot more wicks on German 30. This isn't something I would be messing with too heavy. I mean, the US 30 and NASDAQ, but looking at the amount of pips you would see, I would trade NASDAQ instead of US 30 if you are used to trading German 30. Yeah, this is much cleaner to me. I mean, you still got your fake outs and all that, but German 30 was literally is trending in the same directions for the most part, but in this area you'll see a lot more up and down, a lot of wicks. You don't have that clean movement, so you'll be probably like in profit, out of profit, eventually out of profit, and then it'd be hard to trail something like that if you are trying to swing it. But if you do like trading long term, look at JPN 225. This thing trends like crazy. What are we on the 4 hour? Yeah, it seems like once it's heading in the direction, it's like heading there. Although I don't like this from like a day trading perspective. Like, you got a big push down there, huge retracement, then we're finally breaking it, but the difference in this break is only so much before it retraces more than 50% again. So swinging that may not be like the greatest thing looking at that section, but there's different phases of the market that you can be in. But from like an intraday perspective, this one's really nice to swing. Like, you catch a trade back here, what was this, October 6th? Nice push up all the way to October 20th. Pretty clean too. Like, lows were barely broken, if at all. Like, you have a higher low here, can't draw that, here, and if you want to consider any of this a low, then you have that, and then here. Yeah, you could have called a lot of that. That's like 4 hour. A little cleaner on the 1 hour. Yeah, even on the 1 hour, you don't have a lot of fake outs. So this is a nice pair to swing trade. Like, if you're just trying to hold it for like a week or so. Oh, German 30 could be the same, maybe. That's nice for the most part. So you got a break of here. Like, this is what I don't like when it comes to like holding something long term, is these break of the lows to go take out liquidity, and then they'll continue in that direction. Yeah, I don't like all this break a high, break a low, break a high, break a low. Like, yeah, I can't trade that. I can't. Like, my strategy is hard to trade that. I'll struggle with that. But yeah, is there anything else, John, that you wanted me to look at, or you had any more questions before I hop off? I'm gonna do a bit more back testing on GBP USD a little later tonight. That in US 30. I don't want to. How big stop and pips do you use? That's honestly, if I could simplify it that much for you, I would. All right, here, let me put it like this. So look at if you're asking how big, it should be relative to structure and what price is doing, not a set like, oh, I only risk 10 pips when I take a trade and I target at least 30 every trade to get me my 1 to 3. Like, nah, like you gotta go based off of structure. So like with that, let me see if I can go back to that. I threw all my old drawings on here. I don't know where I was back testing. I think it was August. I think it was like up in here. Looks like a support and resistance area I drew up, maybe held. That's funny. Let's see. Yeah, I don't trade support and resistance anymore. So like this one here, I was trying to catch this sell. It's like the other one I was talking about. Let's take it to the 5 minute. Let's see. Was I not on the 5 minute? All right, yeah, we do it on the 15 minute. So like right here, remember how I was saying I look for my confluences? So 1, gotta have an order block. 2, I gotta see some type of momentum heading towards that 50 EMA. 3, not in this order, but like I want all these things for a high probability trade. So I want momentum breaking that 50 EMA, and I want some type of break of structure. So when that happens, I enter at the break of structure. You could enter different. I used to try to catch the bottoms, but that's hard trying to catch a bottom because so many potential bottoms. You're looking at it. Oh, that could have been the bottom. That could have been the bottom. That could have been the bottom. And trying to catch that, I'm now out 3 trades. And so if I do catch a 1 to 3, I'm only making back what I lost. So try to stay out if you can, if it's not a high probability thing. And I'll put my stop loss honestly a bit below the high or the low. I don't put it at the low because most of the time if price is going to take out a low, and I used to try to like give cushion to those too. I'm like, price will come make a double bottom, maybe. That's not the trade I'm looking for if it's going to make a double bottom. I'm like, my analysis on it was wrong. So my stop loss is like somewhere in here because honestly, in my mind, when price is pushing like this far up into my stop loss, most of the time it's probably going to go and break that high or that low, and then it's going to stop me out even if I do give it some cushion. So why not like make that stop loss smaller, increasing my risk to reward when if the trend goes against me? Because like trying to sit there and hope that price is going to go in my direction, like I can't really do that. So that's how I do my stop loss. So I enter here, there, take profits. Those can be kind of difficult to get initially. Like you can use your Fibonacci sometimes. Like these levels are pretty solid. Let's say I'm looking for a buy. I buy in this area, although I'm not looking for a buy right now. I'll target these areas here, but I usually look over to price and see what was going on. So reason I targeted this area initially, I think it was because of like the wicks and everything. I can see price bouncing off of that maybe. I can't remember what time frame I was looking at. I think it was the 5 minute. Yeah, I was like, that doesn't look as clean. Oh yeah, a little order block here. So I basically have my take profit like within this order block there. And you saw price eventually got down there. Like, I don't know, you just got to backtest that, seeing where you put your take profit and all that. Take profit is just as important as doing your stop loss, because if you just like, oh, I want a 1 to 3, I did all this, now I just want a 1 to 3, and you just throw it here, but this trade may not be willing to give you a 1 to 3, or it could be willing to give you a lot more. So you just got to target that. If you really do believe price is going to make it to this level, target that area. And although I do believe price could bounce off of here and go all the way down here, I'm not necessarily targeting this because price can come up and bounce this, and I do realize I have an order block ahead above, so I'm not looking for that crazy RR every single trade, although it can happen. So that's why it's a good idea to try to leave some type of profits running, so that way you can just let it run and you can catch maybe like an extra 3 RR on this just by letting like such a small percentage of your trade run. Just like that's free money if you could just let it do that. So yeah, so I'll do my stop loss something like that and target in that same area here, although I obviously didn't catch this one when we were back testing. Let's see, so I'll do something like that. Got stopped out there, and if you truly believe it's going to continue in that direction, you can try catching the second entry, but usually my stop loss is somewhere here. But you saw price didn't go and break this, it didn't break the low or whatever. Yeah, come somewhere up in there. And I'm not right every single time on it, but most of the time that's what works for me. It's putting my stop loss somewhere near that high. And sometimes I look for like imbalances or order blocks, something like that. Price can go and fill those areas before it pushes down. So that's something to look at. And then see how the trade plays out or whatever. Something else I used to do, I used to practice by putting a, I would look at the actual structure. So I would cheat. I would look at price, see which direction it's going in, obviously, and hop up in here randomly and see if I could catch these big moves. And so that way your bias is correct. So you know how to trade when your bias is 100% correct. That just gives you like that faith to believe into your bias. So you're like, oh, it's for sure going to go up based off my analysis. So now you have a bullish bias. So now it's up to you to catch that move. So if you can't even catch those moves knowing the bias, then you got to take it back to square one and see like why you're not able to catch those moves even though you know the general direction of it. So that's something cool that I usually do. I don't do it too often. I rather like just throw me in a random point and see if I can figure it out. A little more realistic. Don't do that too much, like clicking, knowing the trend and testing it out. Like once you start getting those winners more consistent by doing that, then you're like, okay, it's a little too easy. So now I'm gonna do it where I can't see it, So yeah, your stop loss is relative to your whole trade, to this order block, it's to structure, it's many things. So when people trade, some people they're just like momentum traders. They wait for these huge breakouts and they're like, okay, price is pushing down. I don't think it's gonna come back up here, so let me go ahead, throw a 10 pip stop loss and target 30 and then call it a day. Some people trade like that. I mean, it works for them, but I need to know why price is doing X, Y, Z, especially if I'm going to start throwing in extra entries and stuff like that. Yeah. Hopefully I haven't been talking too much. You got any more questions? I got 5 more minutes. I can spend 5 more minutes on here. Sorry if I start like rambling a little bit when I'm talking. All right, so may not have any more questions. So I appreciate you for tuning in, John, and participating and asking questions and stuff like that. Go ahead and subscribe to the channel if you haven't already. I will be doing this a bit more frequently, and I'll try to get some more FTMO stuff out. And I'm about to take that 100K challenge, so you get to watch that journey if you want to subscribe. And yeah, thanks for tuning in. So go ahead, take it easy. How many hours will you trade live, you think? Let's see, live trading. I might try to catch the London session tonight. I don't want to. It depends on if I want to go to sleep early and wake up for the New York session, or if I need to go to sleep, or if I want to stay up all night. But if I do trade the London session, I'll be up like 30 minutes before the session starts usually, and see if I can catch any setups then. And I'll probably stay up to like 3 a.m. Pacific Standard Time. If not, then maybe the New York session, 4 a.m. Pacific Standard Time. So yeah, all right, thanks for tuning in, man. Go ahead, subscribe, like, you can leave a comment or whatever, share it with your friends. I don't care. I'm gonna go ahead and close it out here and take it easy.